All right, it's gonna be like a not a long one, but welcome to a new daily recap of Monday, the 17th. 7. I always struggle with the numbers and the T and the anyway, up to the 17th of March, and we're gonna do a daily recap. Yep. Um, yeah, so where are we on the high time frame? Let's start there. So this was our forecast. So that's not really important. You can watch the forecast if you want. Don't need that. Um, yeah, so where are we? We're above these highs with the previous monthly high. We have this bearish structure or bullish structure going on from this low up to this high and some internal range or internal minor structure as well. Um, we got these lows, we got sort of relative equals kind of over here. This is a monthly low. And yeah, so that's basically it. We took this liquidity, create these relative equals in this support area. Which you can see, kind of, not really, but you can see that we reacted here, here, here again. So kind of a support area. Now, if you pull it to the left, you can probably see that it is. Yep. So here we reacted from that level as well. Same here. That's where we stopped. So it's kind of a support area. Good to know. So we can target that. Now, knowing that we are above previous monthly highs, and with these equals and above all highs in general, and inside this 4-hour supply zone, we can expect price to come lower, at least for retracement. Then you can see that last Friday we closed fairly bearish. And today was just a continuation of that bearish move or the bearish candle. And we are now in the area below the CPI news where we wanted to look for long trades based on this red structure. We also know we have this trend line over here, so we can expect lower prices, but price doesn't need to. The thing is, we have 1, 2, and if we just keep those lines and we pull that across, we can see that we kind of have this channel almost. Trend line channel, if you want to call it like that, where price is reacting from. Now we just keep this one and we keep it over here. Now we can actually put it like this now. Prefer it like this, or like this, like this. And we come into our 1-hour PY where we got our first reaction from. And we can actually see that inside the PY we have this or 1-hour demand area, and inside the demand area we have this 1-hour PY where we reacted from. This also indicates that my demand zones are just a simplified version of the, well, if you're not used to it, it's harder to read, but if you're used to it, it's like a less detailed area you want to look for trades. Yeah, that's basically it. And POIs are the more detailed areas, but they will be like tapped less times. That makes sense because they're more detailed. Took that liquidity that's set above. We tap in, so let me actually put it like that. And yeah, that's what happened. Now let's dive into London. Yes, we want to see what happens. I think we reacted from a 5-minute PY. We reacted from nothing. Nice. But there was a short move. So we get our first set of early sellers here, but they're a bit weak. Then we come above this Asia high and we break bullish. We tap into the 50-minute sorry. We tap into the 50-minute supply zone. Now we know that we have previous daily lows over here. Asia low over here. We already took previous daily lows. Therefore, I was looking for longs and I didn't get a long. Unfortunately, it was outside of my time. And there was no like early buyers in this move down, so I was not really interested. However, we came above these highs, so there was a liquidity play. We can actually see before we take those highs, we get this early seller move, taking out this low and this low. We got another form of early sellers over here. After this high is being taken, we get this. Oops. Look. We get this bearish break over here. So that's another, like, that's the real early sellers. Then we come up. We get another group of early sellers, but you don't want to sell here as we took previous daily low, so we're expecting a high to be taken. So knowing that, so the uninformed trader would have sold here after that minor break. They get taken out. If anything, you can also decide to not class this as a break at all, and you just class this as your early sellers, and that's it. Then you get early sellers. That's not clean. Early sellers taken out, liquidities, and then you get your liquidity sweep over here. I don't know why I put that favorite thing on my screen if I don't use it. So you get a sweep. Maybe I should do it like that. Then you get your bearish break. So early sellers, liquidity sweep, bearish break. High taken inside the 50-minute supply zone. Inside the 50-minute supply zone. Now we didn't tap into that 5-minute fair value gap over here. So it's just basically taking the Asia high, taking the high, turn around. Now let me see if we tap into that. Is there like a weekly open gap? No, that's over here. That's also filled. So there's not a lot of high time frame confluence to look for a short, except for a break. And then you get your short entry from this. This buy to sell move, wick break, but that's right, wick break because it's lower time frame. So wick break is sufficient. Oops. Why is it so long? So Asia high being taken. And then we get the short move. Bit breathing room. Oh, funny thing. Look at this. Well, it's not, I don't know. I find it funny because it's just perfection. How it just taps into that 50% and it respects that, turns around. So we can actually go with this one. So this is already 9. If they have another 4, 5, oh, let's just take this one. So 44. Yeah. stops above the high. And where do we target? Well, 1 to 4 or Asia low. And in this case, we target 1 to 4 because we got this bullish where we went to long from. So 1 to 4 is our first target. Then if we come below Asia low, we can see that there's like no liquidity, and we hit the straight, which of which you make a case study. The target CPI, so our second target would be this low from the news. If you let it play out, that got hit. Yep. So that's the short during London. Now looking at the candlestick formations, we can see that, oh, that's great actually. You can see that slowdown, bullish candle immediately followed by slowdown candle, then wick above, close bearish, strong, great. And this one where we got tapped in. Look at how that closed, literally a wick, and then a bearish closure again, and then the momentum stepped in, volume stepped in, and we got that London swing over here, got that turnaround, and we continue down. Then we got a little retracement pre-New York, and then New York continues following the daily cycle. We take previous daily lows, we already took that. And now there's another short, and it comes from London or New York. So, and that one is a bit tricky in my opinion. You gotta favor short trades to take that. But it is valid. So we got this 50-minute supply zone. You can even use this one. Essentially, we tap into that. Itchy again. But we tap in. Now we can go to the 5-minute. Oh, let's delete the. Wait. Oh no, there's no early buyers over here. So there's a long trade, but just break structure. Can actually take that based on the 5-minute, but I would like to see some early buyers, early sellers. Anyway, so it's a bit tricky with the equals over here, but essentially why is it also shit? Why is it, oh man, it's annoying me. Sorry. This is perfect. So you get your early sellers. Those get taken out. Then you get your, always choose that one, get your break. And you get your equals. No break over here, but you get equals. And then you know that this is the break over here. This was your last highest buy move that led to the sell move. So you get your entry area. And you can short it from here, 27. So 17 will be more than half. But that's all right because we got quite a large fair value gap over there. So 17 is all right. Then stops above these highs. 3.2, 3.7, and what a rocket. Asia low is first target. That's where you take your partials. Don't need to target 1 to 4. You can target 1 to 4, but I would just target Asia lows to be fair. But I didn't see this trade because I saw this as a break structure and a long move. So, and then you got that continuation again towards the CPI low. And that's a 1 to 16. What a beautiful trade. This is like class trade. A bit tricky, but it is good. Yeah, and that's a 5-minute break, right? By the way, 5-minute market shift. What the fuck? Ugly charts today. You see the low that led to the high, shift, entry. From there, tricky one with the 5-minute PY over here. You could have actually moved from here, but it didn't. That's good. Mm. 808 milli. And after that, there was nothing. So that's it. That's the daily recap. Peace out.